a lot of senior citizens, they don't need a lot of money because, you know, your biggest overhead, which is your housing, a lot of them have already paid off the mortgage on their house.
So
And
let's hit that real quick, because a lot of people don't know that rule. So this is one of the reasons where I take care of a lot of engineers. They're very, very bright people, over 250 of them in my practice. And what happens is you don't necessarily need a CFA or a CFP or a CPA. And I know those are a lot of credentials and acronyms. You don't necessarily need them every day of your life. But the 2007 tax manual came out. It's about 2,000 pages. It's like this. And yes, that's 15 years ago. And in that 2007 manual that Mark would have gotten if he was already in practice, and I got, and my collaborating CPA partners got, none of us read it all. We're all assigned a portion of it. We know our parts, but if we're not collaborating, Mark may know one part and I may know another. You've got to have that cohesion where you're working together. But in there, it specifically said the same rule that was stated in 1997. And that was that you could not do a Roth conversion in excess of $100,000 of your adjusted gross income. And that included the amount of money that you did for the conversion. Now, what happened in the middle of the year in an email that I got, Mark got, you had access to, but probably didn't read, the IRS raised their hand and said, starting in 2010, so that's 3 years further, starting in 2010, you're going to be able to do Roth conversions regardless of age and regardless of AGI.